Hi everyone. So there are two types of investors. One are in the market for capital gains and one are in the market to take benefits from dividend over a period of time in order to accumulate passive income, right? As you must already be aware, the Nordic American Tankers Limited, NAT, is about to go ex-dividend. You can purchase shares before the 22nd of May in order to receive the dividend, which the company will pay on the 5th of June. Now, the purpose of this video is to find out, is Nordic American Tankers worth buying only for dividend, and how is Nordic American Tankers even able to afford that, right? So Nordic American Tankers next dividend payment will be US dollars 0.14 per share, which looks like a nice increase on last year when the company distributed a total of US dollars 0.13 to shareholders. So if you buy this business for its dividend, you should have an idea of whether Nordic American Tankers dividend is reliable and sustainable. So we need to investigate whether Nordic American Tankers can afford its dividend and if the dividend could grow in the near long term, right? Because why we need to look at long term, mostly people buy dividends for long term returns on their investment as a passive income for their future retirement or whatever savings they might be doing for future, right? So dividends are typically paid from company earnings. So if a company pays more in dividends than it earned in profit, then the dividend could be unsustainable because you're not earning profit and you're still paying dividend, right? But Nordic American Tankers dividend is not well covered by earnings as the company lost money last year. So this is not a sustainable state of affairs. It would be worth investigating if earnings are expected to recover. Given that the company reported a loss last year, we need now to see if it generated enough free cash flow to fund the dividend. If cash earnings don't cover the dividend, the company would have to pay dividends out of a cash in the bank or by borrowing money, which is not long-term sustainable because obviously your debt is increasing and you're taking debt to pay dividend. Now, thankfully, its dividend payment to Nordic American Tankers was unprofitable last year, and unfortunately, the general trend suggests its earnings have been in decline over the last 5 years. It would be interesting to note how this pandemic has caused the earnings to grow, but it would take years to create a trend. So it all makes us wonder if the dividend is sustainable at all. The main way most investors will assess a company's dividend prospects is by checking the historical rate of dividend growth. Nordic American Tankers dividend payment per share have declined at 24% per year on average over the past 10 years, which is uninspiring. While it's not great that earnings and dividends per share have fallen in recent years, we are encouraged by the fact that management has trimmed the dividend rather than risk overcommitting the company in a risky attempt to maintain yields to shareholders, right? So given all this information, it is for you to decide whether you want to buy the stock for dividend or not. If you want to make short-term capital gains, then you can look into it as well. Or if dividends, then you have to see how the company is funding its dividend, right? That is it for today's video. Thank you for watching it. See you until next time.